Welcome back to Business Talk here on Business Tech. And the old adage has always been nobody rolls out of bed and gets excited about buying insurance. And while that's still partially true, I think if the past few years have taught us anything, especially since COVID, it's that insurance has moved from being that policy that you only think about when your broker phones or if there's an emergency to one of the central pillars of financial resilience for households and for companies and arguably for the country itself. If you just think about how important BI cover was during the pandemic, or flood or fire insurance in KZN or NISA during the recent floods and fires. And I think the real question is no longer do you have insurance, but is the model fit for the future? And that future is being shaped by three very powerful currents. We've got the rise of bank insurance ecosystem. We've got the push for deeper financial inclusion as we look to really build resilience in South Africa and Africa broadly. And then thirdly, a fundamental rethink of how technology and humanity coexist in financial services. So today I'm very excited because we're joined by someone who's really helped build the ecosystem. He's watched its evolution from founding one of South Africa's most disruptive risk insurers to now steering one of the country's largest insurance and savings platforms within the Standard Bank Group. Schalk Malan is the head of Insurance South Africa for Standard Bank's insurance and asset management business, overseeing Liberty's retail, life, savings, and corporate benefits businesses, as well as standard insurance. So it's a big operation. Schalk, great to have you on Business Talk. And you came out of sort of gardening leave to take on this fresh challenge. When you look back at the past year for the insurance industry, what would you say were the defining moments that changed the way that you think about the business?
Well, Michael, firstly, I think South African insurance and financial services had an exceptional year. South Africa has seen quite a recovery in our markets, which obviously translated into better outcomes for insurance. And there's been an underlying buoyancy in sentiment, and I think it's not just in financial services insurance, it's in the broader economy. We are seeing people are standing up and saying, let's do business, let's start talking business again. Which is very, very promising for our business, but I think it's also very promising for the industry at large. I think a big shift in the industry specifically is obviously the work that most insurers, financial service organizations are doing around their bank assurance strategy. If you look around, some of the existing incumbents announcing their version of a bank and partnering with a bank. And that's also where, the Standard Bank Group stands on its own in a way, because in its own playing field, because the group, as you know, has got a very mature banking capability across all market segments, which is just absolutely phenomenal, including the business side of things. And then you've got a very mature life insurance business in Liberty, in our savings business, that really allows that kind of complementary skills to bring to the fore. And the key component to that is that ability to deliver advice-based insurance solutions to customers and customers at large. I think the challenge that we've had as insurance business all around, and I think the next year and last year was the year that really teed it up, is how do we provide solutions to not just a certain segment of the market, either your fully underwritten complex insurance high advice products, or your funeral type of products, but how do we really provide solutions into that emerging market? And I fundamentally believe, your bank assurance models is a key component to be able to unlock that. Obviously, being able to deliver to key advice solutions, product innovation, and then, as you call it out, technology would be an absolute critical component to that. So a foundational year, I would say, 2026, to allow us to step into those opportunities.
And Schalk, with that, I've often thought, and when you look at the bank assurance model, which the Standard Bank Group has really pioneered in the country, that, banks, when we talk about technology and smartphones and people accessing services, banks always had an advantage over insurers in that, I as a consumer, I'm almost on my banking app daily. I engage with it all the time. Versus an insurer, and you think, well, you can go digital, but are you going to engage daily? No, you're probably going to engage when there's an emergency or actually when you need the service. So to put the two together, I think it's a really clever way of then solving that immediacy and that distribution challenge for the industry. Where do you see the growth coming in servicing this new emerging market, as you say, and leveraging off the bank insurance model? How does that come together for you?
Yeah. So Michael, firstly, you called it out, being able to have that trust relationship established already at a banking, on a bank transactional level with customers, that deals with the bank, that engages the bank. I think first and foremost that trust relationship is critical, and then to be able to engage those customers in a meaningful way, to be able to understand their requirements, their needs, the availability of data plays a key role. The availability of that trust relationship and that call it history, another key role, and then the critical element there is to develop solutions that's appropriate to those customers at that point in time. But more importantly, it's not just that snapshot. Quite often we as insurers like to segment market, we like to silo things, and that I think is a big has been a big shortcoming over a long period of time in terms of innovation. The ability to be able to understand that client not just as a snapshot but longitudinally over their lifetime, and being able to evolve products through that. I think that's a critical element, and it's and there I think banks in collaboration with the right insurance partner can really play a key role. And Michael, I think it's very important that we unpack that, because irrespective of individuals' income, whether it's a young professional starting out or a young family individual earning 20,000 Rand a month, or that professional person earning multiples of that, those needs that those people have and those clients have are actually very similar. The scale is just different. We all have debts. We all want to buy that first house. We all have our future paychecks that we have to worry about to be able to protect. And it's about having those conversations in those various segments to be appropriate. I think the other thing to call out here is, and there are obviously different models between different providers, but for me, it shouldn't be a conditional model. It shouldn't be, trying to lock a client in and to try and grab more share of wallet. That's not the objective, and that's definitely not how I see it. I do see there are opportunities to create more value for a customer and a client through having more than one product and collaboration. There's more understanding around the risk management of that customer over time, because you've obviously got the access to more information. And for me, it's about creating more value and deliver that in a cost-effective manner. That's the unlock, not to try and really ring-fence those customers outright, yeah, I think that kind of sums it up.
I want to unpack that point you made, though, because I do think, and often the word silo, I think, was invented in a bank where you've targeted the end user, me, Michael, around a particular life event, say, and you've looked at me and you've segmented me. Now you've said, but the real value lies in understanding my evolution longitudinally. So from having, my first paycheck to my firstborn, secondborn, first house, maybe second house. How does that shift the engagement with the client? And maybe you could just take me through an example of what you mean by moving from a life event or a segmented snapshot of the customer to something a bit more longitudinal. What does that open up?
Yeah. So Michael, if you look at, let's just take life insurance for as an example. I mean, if you purchase today a R1 million worth of life cover as a customer, it's there to serve different needs. I mean, quite often it's there to serve, let's say, your debt, outstanding debt, because you don't want to leave your dependents with a debt. It might be for funeral costs, maybe some estate duty, but very importantly, and quite often, that amount is established at that point in time to be able to cover your future earnings capability, for your dependents, because your kids need to still go through school, university, your family, etc. And what's quite fascinating, if you do that calculation very quickly, the amount of cover that you need as an individual at that point in time significant. A family earning 20,000 Rand a month, as an example, need multiples of that. You can just imagine the future paychecks that they need to cover from that, their debts. And then longitudinally, that picture changes fundamentally. Now, very seldom a client has the ability or has got access to be able to continuously monitor and update that financial picture as it changes. As a new family member comes to be part of the family, you bought a new house, a new asset, you got a salary increase, all of those examples. And that means your financial plan is quite often a snapshot and gets left behind over time. And the ability to really deploy technology, data, collaboration with other call it products that's in that client's ecosystem that you got line of sight of, fundamentally that allows the ability to keep track to that more. The problem with that in turn happens is if you don't have products that then respond to that and can be able to really match that change over time, then that becomes challenging. And a large part of innovation and products, the industry talks about those life-changing moments, that something happened in your family. Ability to deliver solutions that can appropriately work through that's critically important. And then if you turn to Liberty and to what we stand for as a product manufacturer, is very much around certainty. We talk about simplicity. And then we talk about that element of humanity, and if I say humanity, it is about taking hands with a customer, and together we grow and protect what matters most. And you can only do that if you understand that picture, not just day one, but also over time in that relationship, because life insurance by definition is a journey. It's a long-term contract. It's a long-term understanding. And for me, that's the exciting and thrilling part. Having said all of that, is if you look at our principle of simplicity, quite often solutions are too complex in the hands of a customer, in the hands of the advisor, and we've been criticized for that, Michael, as an industry, that do our solutions really meet a need, but then secondly, do they actually become too intimidating and customers rather shy away from that? And that's where that perfect solution must lie, to be able to find the solution that's simplistic in the sense that it's understandable, but also sophisticated in the back, a lot of the heavy lifting being done by technology, so that it can over time really speak to their clients' needs over a longitudinal period of time. So the banking partnership, banking solutions comes into play, but also very much that deep understanding of life insurance solutions and structuring them in the appropriate manner.
And that, I think, certainty and simplicity are absolutely key. As you said, I think the industry at large has often come under severe criticism for being overly complex and also not certain, in that you think you're getting a product that will pay out in a specific circumstance, and then you find out that it won't. So what does it mean for you in operational terms? I mean, where do clients actually experience simplicity? Where does that certainty show up? Is it in pricing or claims or certainty of getting the right advice? And then increasingly, we talk about the advantages of automation and AI, and it's all underpinned by data. You've got to have good data. But how do you scale humanity and that connection and build that trust in a digital model? Because a lot of that stuff is also increasingly automated. It's a tricky trifecta to balance.
Absolutely. And that's I think it's not just a opportunity, it's our responsibility, Michael, to be able to deliver solutions that is appropriate, but provides that level of certainty, and you could say, certainty is a must-have in insurance, but certainty extends way beyond just being able to have the peace of mind that your product and policy will pay at the right times. It's also, for me, certainty in every single interaction, and that's something I'm driving personally very, very actively within our business, to say, if we firstly, if we engage with our customers, whether it be advisors, clients out there, say what we do and do what we say, quite simply. And that's how trust gets built up. I think just on certainty, for me, Liberty has got an exceptional track record when it comes to making sure that clients gets paid appropriately, gets paid in the right times. I mean, we've really modernized our claims platform, our claims capability, and it's really bearing fruit that we actually deliver quicker outcomes for clients in terms of decision making. We can communicate better with clients through various mechanisms that's available to us from technology point of view. So there's this huge focus around when you touch a Liberty product, when you touch a Standard Bank Group insurance product, you've got the peace of mind that the product has got this 67-year track record, number one, that is delivered to literally millions of clients out there. But secondly, that we are modernizing and we keep on making solutions better in the experience. In terms of just the point around AI and bringing AI to bear, Michael, it's quite an incredible era we access. I'm sure, we're all reading articles every day around development being replaced by AI capability, that white-collar workers will be out of a job pretty soon, et cetera, et cetera.
Everyone's vibe coding, yeah.
Look, and I think there's, you gotta obviously, make sure that as an organization, we are stepping up to the plate. I think there's, with a lot of financial services organizations, industry at large, there's still a little bit of wait and see mentality. We've got a very deliberate approach to this to say, let's jump in. Obviously we've got to make sure that those solutions are passing all the governance and security, and we are protecting clients every single day. So we must continue on that same level of standard, what's expected of us. But we also got to be able to see what's going on and explore what's new. And in there lies solutions of really just augmenting solutions for providing client information, augmenting solutions in advice. I think AI can play a huge role in supporting our advisors in helping that longitudinal process be much more engaging, much more supportive. And that's what I'm really excited about. Park just all the other benefits that can flow from it. I believe that, as Liberty, as part of the Standard Bank Group, advice for us is a pillar of our business. And that's something we feel in time will become even more important, as we enter this era. And AI would be augmentative to that. It will definitely play the role to support the advisor in collecting data, processing data, making client interactions much more, much richer and effective and valuable. So yeah, very excited about the progress on that front and even within our business that we've got going.
And I think on that point, often because we're in such an exciting era, you've got AI-driven underwriting, you've got digital distribution, and all of this data underpinning it. That means you can give me like a Spotify-type understanding of exactly what I want before I want it. The big fear has always been, where does the human advisor sit in this model of the future? And listening to you talk about it augmenting the advisor, it's certainly, for me, a way of amplifying that advice, because the big concern in South Africa is an advisor's got their own book, their own business, and often they would then pursue only the higher net worth clients because they've also got to make a living. And AI is now hopefully going to help the advisor build their book and maybe broaden their reach and fill some of that advice gap if we get it right.
Absolutely. And Michael, just bring it in again, take the bank collaboration and that information that's available. Imagine, with the support of the client and the advisor, how you can enrich the advice experience for clients. The ability to deliver solutions that really can engage clients and be much more bespoke, much more, fit for purpose at various life stages for that client. All supported then with AI that keeps that process relevant and engaging. I think quite often financial services organizations could be seen as looking to disintermediate, and with AI coming, and that can't be further from the truth in the context of our business. I see advice even being more paramount of more paramount importance than ever before, given given the noise in the system, and we all got a chatbot alongside us to ask for, is that correct or not? And we get different opinions and different views. So it's critically important to still have that human interaction. And then I think, Michael, the thing about our industry and particularly insurance, which one's got to recognize, is insurance is still a very abstract concept and a scary concept for most customers out there, and the challenge that we've all got in most cases, we don't actually know how much we need. We don't actually know what would be the best options. And sometimes we do need that nudge, all of us, including myself, to say, to focus on risk management, because insurance is at the end of the day, risk management on your own balance sheet. And being able to have that advisor nudge you and really put the right option on the table. And look, it will ask advisors to evolve their businesses, which is also fantastic. And just since COVID, a lot of advisors have taken up that call. They've evolved their business to be hybrid businesses, not just face-to-face. They're engaging clients through teams virtually. And that will be a natural progression into further augmentation with technology. So I think it's a super exciting time for advisors as well, because I think their businesses could become much more productive, could create a far greater reach, more information could come to the table. So that means their advice will be so much more valuable. Yeah. And
It's such
an organization like ourselves, is obviously in a position, Michael, to step up to the plate on that, to take their hands, to guide them, to take a leadership role in delivering those product solutions that will support that journey all the way. So that's something that really makes me super excited for the next 4 to 5 years.
Yeah, I think productivity gains, to your point. I'm
Oh,
seeing
it's
it in my
crazy.
business. I mean, just the ability to, after an interview, to be able to transcribe that almost immediately
Oh,
in
it's
Dropbox on
unbelievable.
the paid subscription, for example, with 98% accuracy. The accuracy of these things, even with our South African inflections and accents and everything, it still gets it
Nice.
mostly right.
It's unbelievable.
And then you can run it through an AI program quickly and pull out the key things that you've got to deliver. And it's so that process that may have taken an hour and a half in the past is now taking 5 minutes. So you're scaling productivity at a massive rate. And again, why I think this is potentially one of the biggest game changers for the advice gap, which has been a persistent issue in a market like South Africa's as well. And there are lots of reasons for it. I don't want to get into the regulations or anything like that, but this certainly does help the advisor. And a lot of the independent advisors that I chat to are leaning into this technology. As you say, it's
Exactly.
we may think we're Luddites. I actually think the smaller guys move maybe a bit quicker than some of the bigger guys. And maybe I'm taking a dig at where you are at the moment, because, I mean, you've got a track record as a builder from BrightRock as a startup to where it became one of the top insurers to now leading this business at scale. What's different about creating innovation in a very large, established, complex organization versus a challenger business?
Yeah, Michael. So there are definitely fundamental differences, and there's, as you say, there are pros and cons between each. I mean, if I focus on the challenge within Liberty, within the Standard Bank Group, I mean, there's a significant amount of scale that's available, and so firstly, you can have the ability to innovate on multiple fronts, in parallel. It does allow you that capability. It does also allow you to really make sure that you do every single step of the way in the most innovative way. I mean, I've really encountered the most brilliant of minds inside the business. So you've got access to those skill sets, very, very close at hand. The key challenge in an organization, having said that, of the size that we are at, is to ensure that there's still focus, because you're of such scale and you've got access to resources, you could be forgiven to lighting perhaps too many fires. And it's about really driving that right focus and having then the courage to say no to certain opportunities that's perhaps not in your strategic arrow. And that's something that is definitely, fundamentally different around really making sure that those right disciplines are in place. But I can assure you, Michael, we've got the ability to really get a war room going, and we've got the ability to then innovate very quickly and very rapidly. And that's for me been absolutely remarkable inside the organization, that you can actually disrupt from within. and you've got the ability to do that quite quickly. So it's been a very, very encouraging period of time since I've joined, which is now just over 6 months, that this organization is ready to disrupt, they're ready to innovate, and we've got everything to play for. So yeah, it's a very, very exciting time on that front.
And it's certainly evidence from the outside. I've been watching the group for almost 3 decades now, and had various relationships across various parts of the business. And I don't think I've ever noticed such an energy to disrupt from the inside, and also such an energy at the market opportunity that exists in South Africa and through your Pan-African footprint. And it really comes across. It's an energy that is palpable whenever I chat to any executive, be it in Stanlib, in Liberty, in the broader bank. It's just phenomenal. It does require a sense of leadership, though, in an age where it does feel like the ground is shifting beneath our feet. I think things are just what's the old adage? The more things change, the more they stay the same. Well, the more things change, the faster they change in a world of AI and technology. So what does leadership look like for you in an environment like that, where you've now got to provide that adaptability, that psychological safety net in a sector whose core DNA, as you said, is about managing risk and avoiding downside?
Yeah. So Michael, first and foremost, I do think one has to go back to first principles in these, spaces that's demanding, that's very complex, that's got a lot of legacy and history. We've got to take a step back firstly as leaders, and then for the rest of the organization, setting the right tone to say, why are we here? What's the purpose of what we're doing here? We are here principally every single day to take care of people when they can't take care of themselves, and that call to arms, that clear purpose around every single interaction matters. I spoke earlier around our purpose statement, our values around simplicity, humanity. It's really living that. It's not just on a piece of paper or in training sessions. It's living that, and it starts literally from the top. Whether and I always say to the team, doesn't matter what interaction we have, doesn't matter who the client and customer is, how much premiums they are paying, and what contribution they're making. They are critically important to us as a group, and we must make sure that every email, every telephone call, and we don't get it right every single day. I mean, let's be frank here, but driving that, and that then challenges everybody to find better ways to dealing with every single situation. Because innovation, Michael, is not for me just the product that we take to market, our value proposition. No, innovation is how do we present ourselves over a phone call, in an email, on a policy document. Each one of those elements, each one of those interactions does require innovation. It does require disruption of our own thinking. Then also critical thinking, another key point, being curious, bringing all of those principles to bear. And then overarching that is to create a very clear strategy of where do we want to be in the next 4 years, and what does it mean this year, the next year, and thereafter, and what does it mean then are we going to say yes to, and what will we say no to? And for me, that's really what's critical about my role, and really then driving that through to, and be consistent about that. Yes, if things don't work out, as you say, change happens, every single day and around us. One's got to be willing to adapt, and then have the courage to say, listen, what we've tried doesn't work, or the environment has shifted. Let's change tack. And that's also, okay, provided communication and trust is inherent in the organization. And that for me is really my focus at this stage as a leader of the business. Yeah.
So if you get all of this right, let's zoom out for a little bit. If you get this right, if we see higher penetration, because, the insurance gap is massive, I think it almost runs into the trillions of rands in South Africa. If we get better savings outcomes, if we build more resilience, more financial resilience all throughout society, and not just amongst the high net worth, what does that do for South Africa?
Michael, look, it will fundamentally shift how our future will end out. I mean, if you think about creating a savings culture in South Africa, I mean, and I'm not a macroeconomist, but think about creating a a savings culture, creating a planning for the future culture, for making sure that your children are better off than you are, and protecting them if something happens. That at a micro level builds up to a macro level to get the right outcomes. Because if we've got a savings culture, a culture where we want to take care of those that follow behind us, our country will fundamentally change, because our savings rates will go up. We will not create a situation of feast and famine. Your individual family units will be more secure. There will be greater social cohesion, social trust. Obviously, there will be less reliance on government from a social perspective. All of those things stack up and ensure that we will prosper as a country. So if I look at the role that financial services play, is absolutely foundational to not just creating greater protection for South Africans, but it's actually to create a stronger society. And maybe not in the next 5 to 10 years, but now we're talking intergenerational shifts. And that's very, very obviously a massive challenge to take on. And I hope and I trust, that us as a group could make some contribution towards just improving that outcome, but that's really what we all after, to create a shift in culture and way of thinking for individuals in South Africa.
And if that doesn't get you out of bed and excited, then nothing will, Schalk. It feels like a good place to leave it. Thank you very much. Great conversation about humanity and ecosystems and inclusion, and the very critical role that insurance plays in building a much more resilient South African economy. Thanks for joining us on Business Talk.
Thank you, Bunkel.